Hello and welcome to the Ghost FX Discipline Series Day 6. Please sit back, relax and get your pens and paper out to take notes. The topic today is why traders destroy winning trades. Let's begin. Day 6 of the Ghost FX Discipline Series is about one of the most frustrating and costly mistakes traders make, which is learning how traders destroy winning trades, because the truth is most traders are not losing because they cannot find winning setups, they are losing because they cannot manage winning trades properly. They finally get into a good position, price starts moving in their favor, and instead of following their plan they begin to interfere with the trade, they start watching. Every tick, every small pullback feels like a reversal, every pause feels like danger, and instead of letting the trade develop they begin to sabotage it through fear, impatience, and lack of discipline. And this is where winning trades slowly turn into break-even trades or even losses, not because the market failed them but because they failed to trust their own execution. And one of the biggest ways traders destroy winning trades is by cutting profits too early. They enter a trade with a planned risk-to-reward ratio, maybe aiming for a 1-to-3 or 1-to-5 move, but the moment they see a small amount of profit they panic and close the trade, locking in a tiny gain while completely destroying the edge of their strategy, because over time small wins and full losses will never create consistency. And this habit is driven by fear of giving profits back, fear of being wrong, fear of watching a winning trade turn against them. But what traders fail to realize is that without allowing trades to reach their intended targets they are mathematically setting themselves up to fail, because the entire point of a strong risk-to-reward model is to allow winners to outweigh losers, and if you consistently cut winners short you remove that advantage entirely. And another major way traders destroy winning trades is by moving their stop-loss emotionally, especially when price starts to pull back. Instead of trusting their original stop placement they begin to widen it, telling themselves that the trade just needs a little more room, that the market is just doing a small retracement, but in reality they are breaking their rules and increasing their risk mid-trade, which is one of the most dangerous things a trader can do, because now the trade is no longer controlled, the loss is no longer defined, and the entire position becomes driven by hope instead of structure. And on the opposite side some traders move their stop-loss too aggressively into profit, trying to secure gains too early, only to get wicked out by normal market movement before price continues in their original direction. And this again comes from a lack of trust in the process, because they are more focused on protecting small gains than allowing the trade to reach its full potential. And another way traders destroy winning trades is by overmanaging them, constantly adjusting take profits, closing partials too early, re-entering multiple times, or adding to positions without a clear plan. And this over-involvement creates chaos in what should be a structured and disciplined process, because once you enter a trade with a clear plan your job is not to control every movement but to allow the setup to play out. And this is where emotional control becomes just as important as technical analysis, because even the best setup can fail if the trader behind it lacks discipline. And many traders also destroy winning trades by second-guessing themselves. They see a candle go against them and immediately assume they made a mistake, they ignore the higher timeframe context, they forget the reason they entered, and they exit prematurely, only to watch the market continue exactly as they originally expected. And this cycle creates frustration, doubt, and a lack of confidence, which then carries into future trades and leads to even worse decision-making. And the root of all of this is a lack of trust in the strategy, trust in the analysis, and most importantly trust in oneself, because when a trader truly trusts their system they do not feel the need to interfere with every movement. They understand that the market will fluctuate, that pullbacks are normal, and that not every candle needs a reaction. And this level of understanding only comes from experience and discipline, because discipline is what allows a trader to sit through uncertainty without making impulsive decisions, and patience is what allows a trader to let a winning trade fully develop. And when these two qualities are combined the entire approach to trading changes, because instead of chasing quick wins the trader begins to focus on executing their plan with precision, and over time this leads to consistency, because consistency is not built on perfect trades but on repeated disciplined behavior. And this is why learning how to manage winning trades is just as important, if not more important, than learning how to enter them, because entries may get you into the market but management is what determines your outcome. And the traders who master this understand that their job is not to control the market but to control themselves. They define their risk, they define their target, and once the trade is live they allow it to play out according to their plan. And if the trade wins, they accept it, if the trade loses they accept it, but they do not interfere based on emotion. And this is what separates profitable traders from struggling ones, because struggling traders are reactive, constantly adjusting, constantly second-guessing, while profitable traders are consistent, calm, and disciplined in their execution. And once you truly understand how traders destroy winning trades, you begin to see that the solution is not more indicators, not more strategies, but more discipline, more patience, and more trust in the process, because the market will always move, opportunities will always come, but your ability to manage those opportunities is what will ultimately determine your success. And when you stop sabotaging your own trades, you finally give yourself the chance to experience the full potential of your strategy, and that is where real growth begins. That is the end of day 6. I hope you guys stayed till the end and took good notes. If you like these and want more of these, hit that follow button.